Hi everyone, in this video we are going to continue recording closing entries. In the previous video we started recording the first three. In this video we are going to record the last three transactions, and then in the next video we are going to start building the income statement and the balance sheet for this hypothetical company that we have been working on in the past several videos. So that said, let's take a look at transaction number 4. There is interest accumulated during the period. It's $400 and it's not paid yet. So since we haven't paid it yet, it's going to be a payable account, and the payable account, that liability is interest payable. That's going to increase by $400. We are recognizing the interest as time passes by. And in the meantime, we are going to recognize the expense. The expense is going to decrease retained earnings, and this is going to be interest expense. Again, another way to write this is retained earnings is a journal entry, $400, and then interest payable, that's going to be another $400. That's the journal entry. I'm using T accounts, as I mentioned. They provide better visuals, but if you are used to this type, that's totally fine too. And sometimes you put in parentheses, this is for interest expense, to make it super clear. Okay, in transaction 5, what we are having is a depreciation. We are going to have a whole section about the depreciation, so you don't have to worry about how to calculate it now. All you need to know is it's an expense, so first of all it's going to reduce retained earnings, and that amount is $600. And then on the asset side we are going to increase an account called accumulated depreciation. Accumulated depreciation, let's make it a bit, and that's going to increase by $600. This accumulated depreciation is also called a contra asset account. It's going to show as a negative balance. The increases are recorded on the credit side on contra asset accounts as opposed to debit, so it's a negative entry. A quick note: the reason why we are not reducing PP&E and having a separate account instead of this is because we want to see more data. The way we are going to have, as you are going to see when we do the balance sheet, we are going to have PP&E at historical cost, and then we are going to see accumulated depreciation over time as well. And then transaction number 6, taxes are due $500 and are not paid yet. Pretty much same idea here. Retained earnings is going to decrease by $500. This is tax expense. And then since we haven't paid it yet, taxes payable to IRS, that's going to increase by another $500. So this is pretty much it for closing entries. As I mentioned, in the next video we are going to start building the income statement and the balance sheet.